I don't give out investing advice, and I've always said the best thing to do for most people is to invest in low-cost ETFs, and you can lose a lot of money investing, and you have to have the right temperament for it. So it's for the very few.
Good morning, guys. It is Tuesday, July 15th, and you have exactly 24 hours left to get your bid in to win this eBay auction put on by GameStop, the GameStop Staplegate charity auction, Nintendo Switch 2, and the Stapler, an infamous snafu that the company had a couple weeks ago, which they turned into a very positive PR event here. If you can beat the current bid of $249,900, you can get your very own meeting in Florida with Ryan Cohen. He will fly you out there and take you on a quick run to McDonald's, where you will be delivered your winning item as well as a pair of his underwear. I just wanted to get that reminder out of the way in case you haven't placed your winning bid yet. But in today's video, we're going to talk about the interview that Ryan Cohen did on CNBC this morning, and I'll give you my live reaction to a few of the things that he said on that interview this morning. GameStop trading this morning at $23.53, down just under 1%. And if you guys have been watching my channel for a while, you know that I like to trade in between these demand and supply zones, a channel which the stock has been trading in for about a year now, between $20 and $33. I did make my most recent purchase of GameStop on June 12th at around $21.61. And yes, just like in 2024, if it runs up, or like when it ran up in May of 2025, if there is a run up from here, I will be exiting my swing trade position. My strategy on trading GameStop remains simple: utilize patience, understand how the market is looking at the fair value of the company, and then apply that patience and analysis of the stock to the chart to come up with some timing. And the idea is, as always, to buy at a low price on whatever cycle the chart is telling us at the moment and sell into run-ups. If there was some company news that told me, hey, don't sell into this run-up because this rocket ship ain't gonna stop, then I would analyze that in the moment. But if we're just looking at volatility on the chart, take your profits, wait for the price to come back down, rinse and repeat, buy cheap and be patient. My style of trading might not be for everybody. There are buy and hold traders and there are swing traders. There's all sorts of traders in every ticker out there. And I just recommend you guys do whatever fits your risk tolerance and your due diligence. I have my way of analyzing the play and my way of trading, and maybe that works for you, maybe it doesn't. I recognize that people have a lot of different ways to trade the stock, and I'm okay with whatever you want to do. I'm not here to sell you on any certain way that you must analyze or trade this stock. You make your own choices and you be responsible for your own decisions. As always, take ownership of your choices, and if you're happy with the way things are going, then don't change. If you're not happy, then maybe look at some alternative ways to view the trade. The interview that Ryan Cohen did this morning on CNBC lasted about 14 minutes. If you want to see the entire video, I've got a link to it down in the video description. In this video, I'm going to give you some live reaction to some of Ryan Cohen's comments related to us as investors in GameStop, people that are analyzing this play, or how he is looking at his management of the company and their direction. So without any further ado, let's get into listening to Andrew's questions and Ryan's answers.
Ryan, let's talk about where GameStop sits right now, and in terms of just where you are on the journey. And I mean, I remember talking to you a million years ago, obviously during the sort of GameStop frenzy, but where are you from then to now?
We're a much more profitable business, smaller business, less stores, very strong balance sheet. We are, we've gotten our costs under control, and we've change the business from a reliance on hardware and software to a significant focus on trading cards and collectibles generally.
Ryan touched on several key things that he has been working on at GameStop for the last couple years, and I think these are very important to reiterate. The cutting of costs, the cutting of store locations, getting rid of non-profitable locations, changing the product mix to focus on higher margin items like collectibles. And I think that management has done a fantastic job of, over time, righting the ship and transitioning the company, even though it is going to be a little bit smaller revenue-wise, to one that is going to be profitable. In addition, he mentioned the fantastic balance sheet. GameStop has close to $9 billion of cash and marketable securities. They've got about $4 billion, a little bit plus, of convertible debt. But that $9 billion, $9 billion of cash gives the company, as I've been telling you guys, a lot of potential to transform itself into something meaningful, something different. And although I caution you right now that cash sitting unused on the balance sheet, just earning 4%, is not going to be assigned any real value by the market, it is potential, and that is important for you to understand if you're speculating in GameStop like I am, that potential use of cash could be very transformative to the future price action of GameStop. And that is a bet that I'm willing to take. A lot of people aren't willing to take that bet, and many of you are all in on that bet. But I just want to acknowledge, if you haven't been tuning into the channel, I love the fact that they have all of this cash sitting there, and that is something that I am willing to bet on. I believe in Ryan Cohen.
And how do you think about crypto in the middle of all that?
We made an investment of just over $500 million into Bitcoin, and I look at it as a hedge against inflation and global money printing, and we'll see what happens. So,
but how much should people who are investing in GameStop think of you as some kind of like portfolio of assets and maybe even like a mini micro strategy or something?
No, I mean, we have our own unique strategy, and we have a very strong balance sheet, over $9 billion of cash and marketable securities, and we will deploy that capital responsibly as I would my own capital, and only look for opportunities where the downside is limited and there's a lot of upside. So we'll be opportunistic when we see those opportunities.
Ryan here, I think, reiterating that things are going to happen on his timeline, maybe not our timeline. He says the company will be opportunistic when the opportunity presents itself, meaning they will deploy that cash when they find the right opportunity. And I am perfectly okay with that plan. I see a lot of people out on social media that are running out of patience and venting. You won't find that on my channel, no venting at Ryan Cohen, although I will reiterate that the cash just sitting there for the time being is not really going to add any value to how the market values the share price. It is potential, as I just said, and I'm willing to give him as much time as he needs to find the right opportunities, because when that cash is deployed to generate meaningful additional earnings, not just 4% on treasuries, because we could go get that on our own, when that cash is properly deployed, then I think you start seeing this ticker being revalued in the market.
Well, I'm curious what you think of your shareholder base these days, again, because I think so many people think about the shareholders during what was this GameStop frenzy, and just your ability to take to X or social media and get people, as I said, excited about what you're doing and how you think about that. It's very unusual. Well, it's just unusual. I mean, you and maybe Elon Musk, and I don't know if I should put you in the same category, but have sort of a very special ability to have this sort of fan following that's sort of very unusual. You can post an emoji or something and people go crazy.
We have a loyal shareholder base, clearly. I don't think there's many situations of public companies where the CEO receives absolutely no compensation and is, you can never be completely aligned with common shareholders because everyone has a different cost basis and has a different time horizon, but I don't get compensated. I've invested my own personal capital. I don't have any perverse incentives, and the goal is to maximize shareholder value. So, you see these public companies where you've got executives and they're collecting tens of millions of dollars or hundreds of millions of dollars in risk-free compensation, and frankly, it's despicable. And so that's not the way that I run GameStop.
Ryan, very carefully and thoughtfully and slowly thinking about how he wanted to frame his answer, as he acknowledges that the company does have a fan base of dedicated retail investors. That is without question, I think. And he also noted that his timeline might not line up with our timeline. Everybody has a different cost basis and a different timeline in mind. But I think that he is doing the right thing for the long-term investors in GameStop. And that is something for you to think about. I don't think that Ryan Cohen is trying to deliver a short squeeze. I think he is trying to transform the company into one that has solvency and liquidity. Mission accomplished on those two. And next up, to address profitability, which is what you hear me most talking about right now. Solvency and liquidity are important, but the value that Wall Street will assign to GameStop in terms of the share price that we see on the screen next will be determined by the company's ability to generate meaningful profitability. And I'm not talking about, look, we're just barely operationally profitable now, or we make 4% on our hoard of cash. I'm talking about a meaningful change driving profitability, exceeding other companies' profitability metrics. That is where the true potential in this play exists, if you can hang on long enough to see if they can pull it off. And that is what I'm here for, to see if they can pull it off.
No, the reason I ask is more just about sort of the opportunity set for traders today, and sort of the opportunity to make money in these unusual, I don't know if they're unusual, but different ways, and this idea of democratizing investing, which I think a lot of people look to what you've done and think that this is about democratizing opportunity.
I think that there's a lot of risk in investing, period, especially in individual securities. And I don't give out investing advice. And I've always said the best thing to do for most people is to invest in low-cost ETFs. And you can lose a lot of money investing, and you have to have the right temperament for it. So it's for the very few. But in terms of people being allowed to invest in whatever the hell they want, people should be allowed to invest whatever the hell they want, and they take on those risks. And that's generally my point of view, but understand that it comes with significant risk and volatility, and you got to have the right temperament and do your own diligence.
Ryan reminding us of some things that I try to hammer home to you guys on a regular basis. Every investment has risks, and you must do your own due diligence. And that does not mean just watching YouTube or looking at Reddit posts. It means understanding the 10Qs and the 10Ks, reading them, reading those 8Ks, reading prospectus as they come out, understanding the financial statements, getting someone on your team who can help you understand financial statements if you don't want to put in the work, and read the risk factors so that you can then, as he said, take accountability for your decisions. And if you're not willing to do all of that work, then perhaps, as Ryan said, it might be better for you just to invest in like a index-based ETF fund, because those are there to track the general market for people who don't want to put in the work to understand and manage risks of investing in individual stocks. They finish up the interview talking about the intersection of crypto and trading cards, and basically all Ryan Cohen said is that if there is a demand to utilize crypto to buy trading cards, that is something that the company would be willing to look at. So, I guess we stay tuned and just be patient and find out if that is a direction that the company goes in the future. I have personally no idea if there is any demand for crypto purchase of trading cards. So stay tuned. As I said, the entire interview is linked down in the video description down below if you haven't seen it yet. In the meantime, I'm curious about your thoughts with today's interview on CNBC with Ryan Cohen. We don't get to hear from him often enough, and I'm glad that he shared a few thoughts today. How are you feeling about how the interview went? I've seen a variety of different opinions out there on social media. For you, my channel viewers, I want to hear your thoughts about this interview. So please leave me a comment down below. Thank you for watching, and I will see you on the next video.